What's up? What's up? I'm not up. I should be sleeping. I can't remember ever seeing the markets this quiet and this slow. But that's what we got. So you can bet your ass something's going to happen. When and which way, I don't know. If I were to guess, I would say you might get a spike rally followed by the big beatdown. We'll see. I mean, there's a lot of shit going on, a lot of bad stuff going on, but at the end of the day, it is what it is. Okay. And again, this volume is concerning. But again, remember, we have to trade the market that we have, not the one we want. We have to trade the one that's in front of us. Okay. And this volume every day, it just goes down and it takes away activity. It takes away the price action. It takes away everything that we can possibly do. And it makes trading a bigger challenge. Okay. And again, it's sometimes better to walk away. Okay. If you're not, if you can do other things, get other things done, because this is a time that there's not a lot going on. Look at the lack of activity, the lack of movement. We're still overbought. Okay. And again, at the end of the day, I would expect to see a little bit of a sell-off, but also I don't know where the big move is going to be yet. Okay. It's too hard to tell. It's too hard to predict, which we don't do anyways. You do have PPI tomorrow and then CPI on Wednesday. And I've never seen the CPI come out, the PPI come out before the CPI. I don't know what that means. I don't know if they change it. Was it always scheduled this way? But maybe it's, they want to get some of the bad news out of the way first. I don't know. I mean, I don't believe in the numbers anyways, as you know. I know that the Gen Zers are getting deeper in debt thanks to Bidenomics. Okay. I know that the country is not in good shape. Thank you, Mr. President. The job market is weak. I don't care what they tell you. We've lost since November of 23. We've lost over a million, about 1.8 million in jobs. So you know what that spells, right? And you know what that spells, just out of curiosity? I'll give you a hint. Chair Powell made two statements about this. He broke it into two components. Does any of you know what that means? What I'm talking about? They asked him about stagflation. He said, I don't know nothing about stag or inflation. Well, we are right in the middle of returning to those thrilling days of yesteryear with the stagflation of the 70s, which started with Lyndon Johnson and the ridiculous Vietnam War, continued through Richard Nixon, who decided to go up the gold standard and make it easier for them to value your currency, and of course, climaxed with Jimmy Carter. Okay, everybody blames Jimmy Carter for the whole thing. Now, again, he may or may not have been a good president, but at the end of the day, he was not. A lot of those things were in place before he ever got there. Okay, the wheels were set in motion. So again, I think that this stagflation is very real. I think that you've got. It's been proved now there's some collusion in the justice system with coordinating it with Trump prosecutors. So again, that's another story for another day. And but I think the biggest story, I think, is some of the perma bears are now turning bullish, which in my view, and what used to be, I'm not going to guarantee, I'm not guaranteeing anything, right? But in my view, when the perma bears finally throw in the towel, that's usually about the end of the rally. Okay. Now, again, I'm not predicting that the rally is over, but when the perma bears finally say enough and they want to get long, that is usually the end. Okay. So we'll see how it plays out. As I said, there's a lot of stuff here. I mean, all the major indices are basically still at the overbought level, which means there should be some sort of a pullback. Again, overbought can exist longer than you think. Okay. Again, it doesn't, just because I've reached it doesn't mean that it's going to turn immediately. Okay. Especially in the conditions that you have right now in this market. The lack of volume does what? What are the factors in your mind? If you were to take a guess, what are the factors that affect a market when it's so slow? What does that take away from the things that we're looking for? Anybody take a guess at that? Volatility is one, that's for sure. Okay, it takes away the emotional trade. It takes away the fear. If you're long right now, you're not afraid of the market. If you're short, you're not afraid right now because it's really not going anywhere. Okay, so there's really no fear on either side of the market. Now, of course, if you look at GameStop, which is back in the news again, look what happened to this today. Okay, so here we go. The guy is back. I forget who it was, but whatever his name was, they made a movie about him. But he's back now, and they're having this story, these meme stocks again. But that's some action. Look at the action in that stock. I mean, a 1250 range after an $18 rally or $20 rally on a $17 stock. Okay. Again, I'm not saying we should see that in the indexes, but we certainly should see some more action, some more volume. Okay, which we really haven't seen, and it continues to decline. So it makes things even more challenging. And of course, there's just so many problems in the country today. Okay, well, no matter which side of the aisle you're on, I mean, it doesn't really matter. It's still, there's problems. Okay, blame whoever you want, but the economy is not in good shape. The consumer is not in good shape. The farmers are not in good shape. Okay, so what's that all going to lead to? Okay, that's what you have to think about. Okay, what is that all going to lead to? It can't lead to anything good. Okay, now we'll see. We'll see if we get. There's so much of the pumping up of the economy and telling us how good it is. Okay, that maybe we'll get that big crack like we did in 08. Okay, and again, I'm not predicting that we get what we got in 08, but it certainly wouldn't surprise me because again, when they start reassuring you and telling you how good everything is, that's usually not a very good sign, nor showing a lot of strength. Okay, does that make sense? So we'll see. Connie, you ready, honey? Nice to have you back. I know you've been busy. I hope you've been making a fortune. I always miss you. You're great at what you do, and you bring a lot of good stuff to here. So, and I hope you did well on your travels. I know you're a trader of goods and merchandise. So, in the meantime, as we look across the markets and of course the dollar, which again we no longer trade the dollar, okay, but it's not because we're against the dollar. It is only to do with money. Remember, when I talk about things, it's only about money. Okay, it's about the money that we have to pay to be able to trade it. So why should I pay some asshole exchange the privilege to trade? Okay, screw them. Okay, but if we did trade a dollar, it is trending lower. Okay, the resistance of the levels have not changed at all since last week. 104, 106. Okay, I mean, again, you're going to see. I haven't looked, but I'm going to venture to guess that almost everything is going to be within the same levels that we gave last week. Okay, the euro currency, which we are long, and it is still hanging in this area. It's still basically 106 to 108 and a half. Okay, 106 to 108 and a half. Okay, again, there's nothing going on, and I can't make things going on. And then one of the biggest mistakes, one of the biggest problems traders create for themselves is they think that they have to trade something when there's nothing to trade. Okay, and that's the problem. Okay, the notes and the bonds, we should be long them both. And again, remember, we might have been flat, we might have been long. In fact, I'll tell you what we were today. Okay, today we were long. We were flat the bonds and the notes. We should be long, but they came in flat. Okay, and again, that I can't control. It is whatever the trend is at that hour when I send them out. But again, you haven't changed. 108 to 110 in the 10-year. Okay, now I'm saying I will bet that by December that the 10-year will be down here. Okay, that's my prediction. Okay, which will put interest rates at about 6%. The bond Zulu Bravo, again, nothing's going on. We're still 114 to 118, 114 to 118. Nothing has changed. Again, we're in this ridiculous slow period. The ranges are getting tighter, and you know, when ranges begin to get tighter, all that really means is there's a much bigger move coming. Okay. When you start to wind that airplane, that little balsa wood airplane we have our kids, you tighten the rubber band so tight it snaps. Well, that's what's going to happen here too, one direction or the other. Now, based on that, they're a little bit overbought. My expectation would be lower, and because I think interest rates are going higher, I would suggest lower. But again, right now the trend is higher, and I'm not going to tell you to do anything different. Okay. Bitcoin held our 60,000 pretty well. It did get down to 58, but again, we're still hovering around that 60,000. I think it's still 60,000 to 76,000. Okay. So at the end of the day, look, if you're going to play it, we are short it at the moment from a trading standpoint. But if you were looking for a spot to potentially buy and hold, this would be a spot that I would look at. It certainly has held remarkably well, and it looks like it's building a new base and a new channel. So certainly I would look there at 60,000. Gold, golf, Charlie. Okay. And gold, which we were flat today, but we could have been short. Okay. We should have been short. But of course, this morning, the markets were higher before they collapsed. But again, gold is really doing what? It's doing nothing. It's still really 2,300 to around 2,350. Okay. It's really not doing anything. It came off of the oversold conditions and rallied right back to the mean. So what does it do from here? I would make it make it 2,300 to 2,400. 2,350 is like the swing area to watch. Okay. Silver, which we are long, and again, obviously got to a little bit overbought, pulled back a little bit, looks pretty good, and it's actually starting to look better than gold. And I think if silver can break through 30, I think it goes 30 and almost pops right to 40. That would be my prediction if I were making one. Again, I don't make a lot of predictions, but that would be what I would expect. The compression on this silver, if you go back and look over a longer period of time, let's just look at a monthly chart. Look at the compressions you had for basically 10 years. Okay. So again, I would think that might bring out, a massive push to the upside. I'm not saying it will for sure, but certainly I would look at it. I think you're now looking at 27 support, and I think 29 is resistance, but really the real resistance I think is going to be 30. That's going to be the key to watch. Okay. Platinum, it's going higher. We don't trade anymore because it's not liquid enough. We would be long it right now. It is overbought. It did break through 1,000. I think you want to watch probably 960 to 1040. Okay. And again, I said this today on an interview. I think that, at one time, platinum was over gold. Okay. And now we're less than half of gold. I think that that's going to come back again and go back over gold. So I think there's a monster move coming here at some point. When? I don't know. Again, I use the metals other than the short-term trading, but I buy physical and I'm going to hold them, and I'm not buying up the money I need tomorrow. So I don't really worry about it. I don't check it. I don't even know how much I have exactly, but I'm not selling it anyways. I'm really building it up because I do think, and I really believe that you're going to at some point need it as a currency. Now, it may not be in the next couple of years, but I think we're so close to a civil or revolutionary war that it's scary. Okay. In the meantime, 960 to 1040. Copper, which we're long, continues to spike. And again, this shocks me to no end. But again, it didn't quite give us a blow off here. But certainly I would look at potentially, depending on how it opens tomorrow. If it spikes higher tomorrow, I would probably be a seller. Obviously, I don't have a true resistance level to give you, unless I have to go back in time to find something. And I would think probably 488 might be something to look at as resistance. And I think you're probably looking at, 460 as support. But again, it doesn't make a lot of sense to me that copper is going up. I mean, the housing market doesn't seem as strong. But so unless China is playing their games, which, China's moving in closer. They're setting up new areas that are closer and closer to the United States. Okay. They already own a lot of property in the United States. I think they're trying to take over the farmland. So again, they could be forcing and trying to price things out. Again, I'm not saying they are. I'm just saying it certainly wouldn't surprise me if they were. In the grain markets, again, we popped. Okay. Nice little rally. Okay. We're long corn. I would think you're going to see a little bit of a pullback. I think 480 is the resistance. I think 450 is support. But I wouldn't be, if I wasn't in already, I wouldn't be a buyer here. I would be waiting for a pullback to be a buyer. You saw that they're starting to get rid of the shorts are starting to get out. And the nice thing is they haven't run out. So we haven't gotten that big short squeeze yet, which is great. Gives us more opportunity. And the volume is starting to pick up a little bit as well. So I think that, again, the pullback, I'd like to be a buyer. I mean, I'd love to see it get back to 450, but I'd be looking at 460 as a potential buy spot. Soybeans are still kind of chortling, but again, you had last week, we had the big rally, okay, that went through, overbought, came back down. Now it's on support. So I think 12 bucks is pretty key on the downside. And I think that the upside is 12.75. Okay, 12 to 12.75. Now we should see, one of the big stories of the grain markets is that grains are the second alternative that money goes to after the equity markets. So if we do see some pressure in the equities, you could see the grain start to take off as well. Again, I wouldn't be jumping. I wouldn't be running now when corn was $4 and I said I was a buyer. That's the time to be looking at it. When wheat was under $6, that was the time to be looking at it. Not now. Now you're overbought. Now you want to, if you're going to play it, you want to play for a pullback. So either you want to get long and wait till it pulls back. And I would think that 640 is the support. I think it's 640 to $7. Okay. But now you're looking for a pullback. I mean, the truth of the matter is that we're long, and as bullish as I am on wheat, I would consider if we gap open higher tonight or tomorrow, I'll probably sell some for a trade. Again, remember, there's a difference between a trade that I'm going to put on that has a risk that I'm going to assign to it, and I'm not necessarily going to hold it. I could certainly get stopped out. But again, I don't mind trying to play both sides of a market and capitalize on one side, knowing that I'm holding the other side. Does that make sense? Okay. Cattle continues to be in nowheresville. Now, again, I say to you, and I'll say it again, I think the risk in cattle is being long, not being short. There's always a risk to being short. It gets scary. But to me, we don't trade anymore. But to me, okay, I'm short. I've been short for, I don't know, a month. Okay. I'm not getting out. I have no fear to the upside. Now, again, I could get hammered. Don't get me wrong. Again, I have stops in during the day. Okay. I could get hammered, but I'm not really concerned. Okay. I think that the risk here is the downside. Okay. By being long. I don't think there's a lot of risk to being short here. And again, don't take that to the bank, because of course you have to be prepared to get beat up if I'm wrong. Okay. In the meantime, I'd say you're looking at 175 to 180. Feeder cattle, again, very tight ranges. Here we went from overbought to oversold. You're churning around. And so what else are you noticing about where the overbought and the oversold conditions come in at? What else are you learning or noticing from here? Anybody got a guess? Be curious. And if you don't have a guess, these are things you should be thinking about as you're trading. Okay. Okay. The answer is that the bands are narrowing. The standard deviations are coming in to be narrower. So the ability to move that fast up and down is not really that big a deal. And the edge that you would be getting or gaining is getting tighter and tighter. Okay. So again, that's something just to look at. Like I said, there's a lot of little factors and markets that you can look at to help you make a decision that you can combine with other decisions, things that you use to make your final decision if you want to get into a trade. Okay. In the meantime, 236 to 248. Hogs. Now this is going to look funky, so I'm going to change this real quick. I'm going to use July, which I prefer. Okay. Okay, so July is right here. Now I'm going to be a buyer tomorrow myself. Again, we don't trade them, but I'm going to be a buyer at $1 right around here. Wherever they open, if they open lower, I'm going to be a buyer. I think you're still looking at $1 to $1.10. Okay, I think $1.05 is going to be the swing area. Okay, but again, you obviously would be short this if you were trading it, through our model, but we don't cover it anymore. We don't trade it anymore. So natural gas, okay, a little bit overbought. It has been overbought since last week. So again, remember, just because it's overbought doesn't mean that you jump in and you sell it. Okay, because look at how long it's been overbought for. 4, 6, 8, 10 days. Okay. Now at some point that we'll have a little bit of a pullback, but the volume is still light. There's not a lot of action here. So why would you want to get involved in this if you didn't have to be? I mean, now we're in it, we're long, which is fine. I think it's $2 to $2.50. Okay. Now, if we open up at $2.50 tomorrow, I'd certainly look at selling it. I mean, I'm not afraid to sell it, okay, or buy it. I'm not afraid to do either side. If it's the right trade based on the circumstances, I'm not afraid to do either side. Crude oil, a little bit of a bounce today, but again, oversold, right? We were oversold last Monday. We got oversold all the way into Friday Wednesday or Thursday, and then it bounced. And what did I tell you last week? I said, look for a bounce at some point in crude oil, okay, because it's going to happen. Remember, okay, this is not an opinion. This is not trying to figure out what the market's going to do. This is just purely a math equation, okay? When they get to a certain point, especially in the commodity space, that they get so oversold or they get so overbought, the odds favor you to go on the opposite side of that trade. In the meantime, I would say to you that you're looking at 76 to 82 still. Okay, 80 seems to be pretty solid resistance as well before it can get to 82. Cocoa got hammered. We're short cocoa now. We rode it all the way up, which was a great trade. And now it's just getting blitzed again. Look, these are thin markets. Okay. Cocoa, the soft commodities, not only are the regular markets thin now, and the softer is even thinner, but they're always thin, which is why we don't put them out in every portfolio. Why we don't actively trade them. Okay. They're always quiet. Okay. They're always thin. But in the meantime, again, forget about the product because I do not want anybody participating in cocoa unless you know exactly what you're doing. But certainly, if I were looking at this chart, and again, remember, it's a chart I'm looking at, not the product, I would certainly look at potentially wanting to buy into this pattern. Okay. And not because I think it's going up a lot or whatever, but I think it can retrace back to the mean, which is 94, which is a hell of a move. Okay. Does that make sense? Are you guys following me on that stuff? Just to make sure that, again, I want you to learn this so you have it in your arsenal. And if you don't answer, I guess that means you don't understand. Okay. Okay, cool. All right. So again, I'm not saying it will, but certainly I would look at it. And I think that by the pattern, it would be something I would certainly be keeping my eyes on. Cotton continues to get hammered, working towards the lower end. Again, after making that big move up, but it did make somewhat of a double bottom in a sideways market over the last few months. Look, again, I think it's really just 75 to 80 until it makes a move. One of the problems we have in these markets is the narrower they get, the tighter the ranges get. It's hard to make money with inside the range. So we need it to break out one way or the other. Okay. And at some point it will. And again, the probability favors that this will break out to the upside. Sugar, which we're short, broke down. Again, if this were a liquid product that I would trade, that I would want to trade actively, I would certainly be looking to be a buyer tomorrow. Okay, we're short. Okay, I think you're looking at 18 to 20 as the levels. Okay. But certainly this is a pretty big break, right? This is taking us back to lows not seen since 22. Okay. So at the end of the day, again, I would look at this. This is a blow off pattern. Okay. You would expect a little bit of a bounce probably. Again, please don't get in these unless you understand them. Softs are thin. They trade overnight more. I mean, not really overnight. They trade in the middle of the night. Okay. So, but again, certainly 18 to 20 would be the levels. And if it got down to 18, I would be willing to take a potential trade on it. Okay. OJ is back up on its high horse again. And of course, we're long it right now. And again, see, here's exactly what I talk about, right? Here's the potential blow off to the upside on Friday. Here's a follow through. So I would be looking if I would trade this, and this I wouldn't even attempt to make the trade on, but certainly it is the right pattern to look at, okay, as a potential short. But right now, I think you got resistance probably at 425. Okay. And I think that your support is about 380. Pretty wide damn range. Okay. And coffee, okay, which again, we're short. Okay. It got cracked again today. And as I told you last week, I'd look to be a seller. As I told you a couple weeks ago, I'd look to be a seller. Because again, I'm not playing the product. I'm not trying to guess what the weather is going to be. You know, there's a whole bunch of talk about weather now. You know, it's going to be hot and dry and all that. Well, that would obviously make commodity prices go higher, the grains and things. I'm not looking at that. I'm looking purely at the price action. None of the other stuff matters to me. Everybody knows that stuff. But how many can actually react to a market and say, hey, this is a good place to get short, or hey, this is a good place to take a shot to the long side? And I'm not saying you should or you shouldn't or whatever, but recognize when the opportunities show themselves. Does that make sense? You don't always have to make the trade, but at least be able to recognize that the possibility of a trade exists and apply those same principles to your own trading of whatever you're trading, because everything trades the exact same way. Okay. They all trade, and first of all, they all anticipate the news. Okay. They don't wait for the news. They're already pricing in the news. Okay. Whether it's hot and dry weather or whether it's earnings, whatever it is, and recognize the pattern, because all charts are the same, all patterns repeat themselves, and the shortest time frame always has to resolve the longest time frame. Okay. That's just the way life goes. Okay. Lumber, which we don't trade, but we watch it. And this must be a rollover. I'm going to guess. I don't think that it gapped up that much. I'm going to guess that rolled over. Let me just see what it looks like. Not that it matters if we don't trade it, but I'm curious because again, I look at the difference. Okay, so let's look at July. There we go. Now you see you don't have, see the lack of liquidity? Okay, now you pick up some action. Look, this is pretty ugly. And it's like goes against copper, and it makes things more confusing when you think about the markets in general. Okay. I mean, copper and lumber should be somewhat going together since they're both building materials, right? But they're not. So it's kind of an interesting situation, and the dynamics of how screwed up the economy is right now and how bad things are in this country. Okay, that markets are being, the Chinese do have more control of the copper market. And in fact, in China, business could borrow on their copper holdings. Okay, which makes another thing that they bring in, not like lumber, right? Lumber is created here for the most part. Okay, so again, markets are slow. It pays to be more diligent. It pays to be more relaxed, and it pays to, either study or not trade right now. Okay. I mean, our day trading in the morning, although we've made money, has been virtually, we're lucky if we get one or two trades in an hour. Okay. It's not fun to trade like that. And again, when you put yourself in that position, it creates more headaches for you because you're trying to trade in a market that is virtually right now untradeable. Okay, unless you're willing to hold on to the positions for a longer period of time and take more risks. Does that make sense? What OD? I don't know what that means. Even I read bad typing, but I can't read that. I don't know what that means. I don't, because you're behind me. I don't know what in context you're responding to, unless it's a typo. Well, I opened up with the meme stocks, but I will answer it again. I look, the meme stocks are very thinly traded regularly. They're heavily shorted, and you get a squeeze going, you can get it. And you got it in GameStop, which I showed earlier. I'll show it one more time before I switch over. Okay, we were actually long GameStop going into this. Many of us were. Some of us had sold out earlier, and but by the way, if you sold out earlier, great job. There's nothing wrong with you didn't get this move. But if you didn't happen to be lucky enough to still have it going into this, okay, God bless. It was a good trade. I hope you sold it today. Okay, no matter where it goes from here, I hope you sold out today. Okay, because again, that's a hell of a move, 67% or 75%, whatever the hell it was. Any final questions on part one of the call? Because we're going to flip over to part two right now. But if you have any final questions, feel free. I will wait and give you a shot. Otherwise, I'm going to switch over and go to our secondary, or the actual Monday night call.
Calling all options and futures traders. The markets may be wild, but you don't have to be. Join the Tradier Options Summit, sponsored by SIBO, on May 22nd. Let's tame the volatility with expert tips and strategies on navigating volatile markets in 2024. I will be hosting this full-day virtual online event. Learn from the best. Industry leaders will share their insights, trade ideas, and strategies on navigating these volatile times. Plus, get a sneak peek into Tradier Futures, which will be launching soon. Sign up now to be part of the action. Reserve your free spot by registering at the link below. If you're part of our email list, stay tuned for your invitation and link to register. Also, remember to visit hub.tradier.com. Join the Tradier Hub for free for all your market insights, trading ideas, market news, and daily live shows with industry experts covering all aspects of the financial world. See you on the 22nd at 10 a.m. Eastern Time, sharp.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and/or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and/or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc. All rights reserved. Member FINRA.